Good morning, everyone. This is Financial Literacy 101, and everyone has been asking me. It doesn't matter where I've been or where I have been going. Just came back from Colombia not too long ago, and even some Dominican Republic investors and business owners, when I was in Colombia, was there. We was at a cigar lounge, and they were even asking me, Ross, where should I put my money? How should I invest in such a down market? Because they're investing around the world, whether it be Forex trading, currency trading as well, or even investing in the U.S. stock market. And they continue to ask me, where should I put my money? But before that, of course, like anything else, we got to pay the bills.
Black America. While we celebrate symbolism of having a black woman in the White House and a black woman in the Supreme Court, right now as we speak, black women are the most likely to lose their house. Black men have the shortest lives, black children have the highest suicide rate, and even though we are around 15 to 20% of the population, we are over 55% of those living in the streets. We are going to be third-class citizens in the nation we built. We better wake up and vote for real policy. Vote for Greg Marcel Dixon. Repair Black America to fix.
In a bear market, a down market, however you kind of want to label it, ladies and gentlemen. But there's some things I want you to take away. We understand that a bear market refers to a widespread decline in asset prices, meaning your portfolio, meaning your stocks, even your real estate, whatever asset that you may have, of at least 20% from the recent highs. And it's definitely been in a very declining state when it comes to majority of people's portfolio. Now, clearly, these times are not nothing to look forward to, but fighting back can be dangerous. And a lot of people are trying to still make risky investments, and this is not the time to do that. So I think what's important is, number one, you need to keep your fears in check. I have a lot of close friends, I have a lot of close buddies and associates that are telling me they are just fire selling their stocks. They're just selling off their stocks. There's a saying that the Dow climbs a wall of worry. Meaning anytime that the Dow goes down 20% or more, you will see a mass sell-off of people selling their stocks back to whoever the organization and business may be, which then those owners and CEOs and CFOs and COOs continue to buy up their stock and hold their stock to have leverage when the market then turns and then they sell it at a much higher price. Now, the one thing that I think you guys should be doing is exercising dollar cost averaging, DCA, where you put a monthly allotment. I've said this many times before, you put a monthly allotment of anywhere from $5 a day, which equals $150 a month, and you pick anywhere from 3 to 5 stocks to really build a solid portfolio. Now, for beginning investors and even novice investors, you really want to have some bonds, you want to have some tips, some treasury, inflated protection securities. So even in a state that we are now where the inflation or the CPI, the consumer price index, is rising from anywhere from 8.5% going up to 9%. Now, there have been some downtick where I think it only dropped 0.2%. At the highest, we were looking at 8.5? Now it's 8.3. The question is, when should you invest? You should continue to invest no matter the cost, but with some hesitation. Not that you should slow down or stop, but where you put your money is important. It's kind of like saying, there's a saying within the investment world of playing dead, right? Because during a bear market, the bears rule and the bulls don't stand a chance, because bulls are banking that the stock market is going to perform exponentially well, anywhere from 10 to 20 to 30%. And the bears are banking on the market doing horribly bad. That's why you see a lot of people still making millions of dollars off put options, okay? Put option, are you investing in option trading that the market is going to go down? There's also another saying that basically during a bear market, it is time to play dead. It's the same protocol if you met a grizzly bear or a black bear in the woods. Fighting back would be very, very dangerous for you. But staying calm, not making any sudden moves within the market, okay? But that doesn't mean you stop investing. It means that you're not gonna go ahead and drop because Tesla is down 20, 30, 40%. You're gonna go ahead and drop 10% in Tesla. No. That's a very astronomical move. Don't make any sudden moves. Still make moves, but very, very calmly, meaning that you continue to stay on your path of dollar cost averaging, of allocating $150 a month. You may allocate now versus individual stocks into your bonds and also your securities, certain securities like index funds and ETF funds. And again, for those of you who are still investing in mutual funds, get the hell out of them now. It's been proven time and time again with many researchers, I've read it in many books, that mutual funds have the most hidden fees out of any fund and security that you can even invest in, okay? And for you who are still investing in your company's IRA, ensure that that company is not getting kickbacks. And when I mean that company, I mean your company. A lot of times, brokers who have the contract with your organization to hold your IRA, they're giving your organization kickbacks to have that portfolio. Okay, that's kind of paying them under the table, so to speak. So if that's occurring, most likely your IRA is within inside of a mutual fund of that organization. So that's something that you really need to pay attention to as well. I would tell you, if you have the option of getting inside an IRA or a 401k, that's what I meant, a 401k with inside your business, make sure they're dealing in index funds or ETF funds and not mutual funds, okay? Now, secondly, diversification is very important here. Hopefully that you have a well-diversified portfolio, that you spread your assets and your investment, stocks, bonds, cash, even precious metals like gold and silver, platinum and palladium, or even in some regards, copper. That's still worth a bit of money as well. But most likely, most people are going to have gold and silver like myself. These are alternative assets, which is the core of diversification. Now, as I've been looking at the different markets, I see that gold and silver is down. I see that stocks are down. I see that bonds are down. I see, index and mutual funds are down, but that doesn't stop me from investing. I think that you guys need to stay steadfast. And for those who are worried, those who are unsettled in their investments, then the one thing I want you to do is play dead. Don't make any sudden moves. Don't make any sudden moves, because the worst thing you can do is be a scared and fearful investor. And this is a second thing of the mindset and behavior of an intelligent investor. If you don't have the mindset to continue to buy in a down market, then I don't want you to do anything. I don't want you to sell. I don't want you to buy. I don't want you to transition. I don't want you to transfer. I don't want you to transform. I don't want you to safeguard. I want you just to play dead. Act like the stock market doesn't even exist. Because time and time again, ladies and gentlemen, the stock market has come back many a times. Many a times. It's part of the investment cycle. And we see this anywhere 5 to 10 years where the stock market performs horribly bad. Now, throughout every year, you will see what they call, quote unquote, a market correction, where the market may go down 5 to 10 points and bounce back 30%. The value here is to stay put in the market. I have a lot of friends, once again, in certain stocks that have continued to go down. Now, the question is, when do you sell? When do you actually sell? If anything, if the market is up and your stocks are still performing horribly bad, the first thing I do before I sell my stocks is I do the research. Why is this stock doing bad? Is there any federal regulation that's affecting the stock? Is there any state regulation affecting the stock? What did the CEO do or did not do? The COO, the CFO? Is there any scandals within the business? Is there any fraudulent business dealings? I do my research before I sell off my stock, because a lot of times stocks can go into a 1-year decline and then the next year triple their returns over the course of the last 5 years. So you have to do a bit of research before you just, oh, it's doing bad, let me sell. You could be losing thousands, if not hundreds of thousands of dollars with that mindset. So I just would tell you guys to play dead. I would tell you to play dead. Now, there's always ways that you can make money in the current market, and that's short selling. Okay, that's one sure way that you guys can make some really good money is short selling and swing selling. Okay, swing stock trading. That is when you're essentially watching how stocks perform from minute to minute, hour to hour, and day to day, especially with swing trading, right? You buy a cumulative amount of shares and you're watching the percent rates, whether you are banking on the stock market and increasing in value or decreasing in value. But this particular type of trading, you have to watch constantly throughout the day. A lot of you have everyday work jobs, 9 to 5. You're in and out of meetings where you can't be on your phone or your tablet or your laptop watching stocks all day. So swing trading can be very, very profitable, but it can also be very unprofitable if you're not watching every single second and every single minute. Now, short selling is probably the best way to go if you guys have 9 to 5s and you can't be on your on your cell phone or your laptop, whatever, mobile device that you may have to be investing on. Short selling is probably your best, where you're buying a cumulative amount of shares one day and selling them the next day, right? Or maybe the next 3 days. Where swing trading is, very, very volatile. It's almost like day trading, right? Because swing trading, you can trade within a day, within a week, within a month, over the course of 3 months. There's really no clear defined definition of swing trading. Now, of course, you can go out and research, as Mike will say something, but swing trading is just crazy. You can do it out the day, but some people say, okay, that's day trading, but I don't want to get into the weeds with that, but very, very important. Now, for those of you who want to continue to invest and you want a safer, okay, no investment is safe, but there are safer investments, if that makes any sense. And anytime you divulge your investment and your money into stocks and bonds, the number one and number two types of investing I would tell you to get into is index trading and ETF trading. That's exchange traded fund trading. Those are the top two, okay, besides bonds, okay? Government and corporate bonds. Now, when it comes to government bonds, you're only going to make anywhere from 2% to 5% at the highest. Now, when it comes to corporate bonds, you get a little more return of investment. You can make anywhere between 2% to 8 to 10% on your investment, but 10% is really on the high end. Then I would definitely tell you guys, steer away and stay away from junk bonds. Okay, these are not well-established companies, or these are not well-established organizations, and this is a huge risk. This is almost like penny trading, where they pump and dump these particular bonds all the time. So stay away from junk bonds. Invest heavily into government bonds and to corporate bonds. Now, coming back to index funds and ETF funds, these are your safest bet when you talk about funds in period, and stay away from mutual funds. Let me tell you this, over the long run, the stock market tends to go up and the economy continues to grow. If you notice, if you look back 20 years, the economy is up, 300, 400, 500% than it ever was before. So it really doesn't matter the state of the current stock market. For those of you who want to establish wealth, for those of you who want to do financially better than you ever been, continue to invest. For those who are fearful and worried about this, that, and the other, then I would tell you to play dead. Like there's a grizzly bear on the loose. And you simply don't make a move. Don't make any sudden moves. Because I know there's a lot of you that are fearful out there. You just want to sell off your entire portfolio. Do not do that at all. Do not do that at all, because while bear markets may interrupt this otherwise bullish trend that may occur here, that the downturns always have ended ultimately reverse, reaching new highs. Have you noticed that? Anytime there's a down market for quite a bit of time, just like the recession in 2009, 2008 time frame, the stock market has performed and broken records since that time frame. So by investing through bear markets, you can buy stocks when they are priced lower, quote unquote, on sale, on clearance, and accumulate strong positions within those stocks. And ladies and gentlemen, it's June 1st. Do you understand that we're 2 days away of the Amazon split 20 for 1? And I've been trying to tell you guys, invest in Amazon and have at least one share of Amazon, because see, we're on Wednesday. On Friday, Amazon is doing a 20 to 1 split. That means if you have one share of Amazon on Friday, or they probably, push it to Monday, you're going to have 20 shares of Amazon. You're going to have 20 shares of Amazon if you have one share of Amazon before Friday. Okay? So very quickly, let me show you how I've been doing in my portfolio. I haven't really been showing my portfolio lately because I've been doing horribly bad, but the market is bouncing back. But let me show you this very, very quickly here. Man, my portfolio is horrible, ladies and gentlemen. It's horrible. Here we go. Let me see what I can do here, getting some technical difficulties. Give me 1 second here. Yep, still having problems here, family. Give me 1 second. See if I can get this popping. All right. So this is my portfolio. In the past year, I have lost roughly $12,000 because the market has been doing astronomically, horribly bad. I mean, bear market, bear market, bear market. But I'll tell you this, I have not really made any major moves. If anything, what I've been doing, I've been putting a lot of money in my house. I've increased the value of my home. My wife, when we was out walking this morning, she said, babe, she said, a lot of things don't move me. I'm not really impressed with many of the things, but now I understand why you put so much money in the house. We bought this home 2 years ago for $390,000. We had an independent appraisal that the bank sent to our home. We didn't order him. We didn't, offer him any additional money. But he came out and he appraised our home because the bank was like, well, we're looking at your home. It's worth $550,000. And we're like, oh, yeah, that's pretty good. We bought it 2 years ago. We paid $390,000 for the home. So now it's worth $550,000. And I was like, no, I put over $30,000 in this home. This house is worth a lot more. So the independent appraiser came out that the bank sent. And we got the report just yesterday. They said our home is worth $750,000. Some people may say, look at God. I'm going to say, well, look at equity. Some of you may say, look at God. I'm going to say, look at equity. $750,000. And I really think it's supposed to be around $800,000, but that's no here, no there. But anyway, as we're looking at my portfolio here, ladies and gentlemen, if you notice, I really haven't made any changes. I really haven't invested anymore. A lot of my options have been expiring out of the money. So I'm pretty much playing dead at the current moment, but I am about to make a couple of moves because the past day, the stock market actually went up. Okay. The stock market actually went up. If you can notice right now, my portfolio is up around $244. In the past week, my portfolio is up $3,000. So these are the trends that you guys should be looking at. So in the past year, my portfolio has been down roughly $12,000. In the past week, my portfolio has been up around $3,000 at 14%. And then of course today, it looks really, it's kind of teetering back and forth between $200, $250. I'm gonna hit the live market very, very quickly. And that's up around $200 as well. And I'll quickly show you some of the positions I have in the market. I still have 3 options. Okay. All of these are call options. Okay. but all of them are doing pretty well. Okay, as you notice, I have Neo, Plug, Apple, Road Generation, Tesla. This is a Vanguard stock, Triple Q, Sundial Growers, Blink Charging, Coinbase, Skills, 3D Printing, Squarespace, Robinhood. Some of these I'm not familiar with. I totally forgot. I just leave it in my portfolio. We have Berkshire B. That's doing really well. Another Vanguard stock. We have FinTech, Oracle, that's Duolingo, Amazon. You see, I have one share of Amazon. Okay, I have one share of Amazon. And don't forget, on Friday, they're doing a 20-1 split. I have Snapchat. Let's see, Goldman Sachs, Facebook, LX, I forgot this, Riot, Bitfinex, Google, SoFi, VGT is another Vanguard stock, and then Global Satellite, okay? Here are my cryptocurrencies. I have ETC, Dodge, and I have Bitcoin. I know a lot of people, I've been noticing the market, Bitcoin has been slowly climbing. Let me show you something very quickly. So if you see over the past week here, Bitcoin has been up. Okay, Bitcoin has been up, especially my portfolio has been up around $2,200. I'll show you how much equity I have. My total return is still down 2,000, but they said today's return is roughly about 1% as I'm climbing to 1%. Now, as you notice, I don't even have one Bitcoin, and the average cost when I bought my highest share was at around $42,000. But it's slowly climbing back, okay? Slowly climbing back. Let me shoot today's. Today, I'm up around, $270 if you round it all off. But nonetheless, I show you over the course of the year, I'm down 14%. I'm down $5,000. So again, a lot of these things I'm let ride. As you notice, I only have $50 in Bauer & Power, and I'm basically playing dead at the moment, okay? So a lot of times I shift my investments, whether it be in the stock market, or you invest in your home, or you invest in yourself, or you in a high market in real estate. Me and my wife, we're still looking at property to buy, but man, the market and just trying to buy land or even a home on land is ridiculous, to say the least, okay? I see we have my brother Wendell. What's going on? How you doing, sir? But if you guys have any questions, I'm about to end here. Please put them in the chat. I'll do my best to answer them. But again, I know I've taken a vacation. Okay, I needed a vacation. I know I've been doing a lot of political videos because we understand that politics play a huge role in the financial markets. Okay, the feds control essentially how the stock market could even perform at certain times. So with that being said, ladies and gentlemen, that's my time for this morning. You guys have a great and wonderful day. You know it's hump day. You got 2 more days left. Hang in there, and the weekend is almost here. You guys have a great and wonderful day. This is Financial Literacy 101. Learn money and be inspired. You have a good one. I'm out.